Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Monday morning, October 21, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. The Dow Jones Industrial Average and S&P 500 chalked up record closing highs on Friday, with the Nasdaq also in positive territory as markets were boosted by earnings-driven jump in Netflix shares and broader gains across technology stocks. All three major Wall Street benchmarks ended the week higher. The Dow and the S&P 500 have risen for 6 consecutive weeks, the longest such streaks since December 2023. For the week, the S&P 500 gained 0.9%, the Nasdaq Composite advanced 0.8%, and the Dow Jones Industrial Average climbed 1%. And for the day, Friday, the S&P 500 rose 23 points, or 0.40% to 5,864 points, while the Nasdaq Composite advanced 115 points, or 0.63% to 18,489. The Dow Jones Industrial Average gained 36 points, or 0.09% at 43,275. For the Dow, it was the fifth session in the last 6 that it had posted a record closing high. Technology stocks powered the Dow and the S&P 500 to fresh records Friday, while the ongoing swoon in fuel prices dragged down energy shares. Many of the so-called Magnificent Seven tech stocks, which have driven much of Wall Street's rally this year, rose. Gains in tech giants Intel, Amazon.com, and Apple, notching its all-time high, outweighed American Express's 3.1% earnings-related drop. Apple gained 1.2% after data showed a sharp increase in new iPhone sales in China, while chip heavyweight Nvidia advanced 0.8% after Bank of America Global Research hiked its price target on the stock. Intuitive Surgical also posted solid third-quarter earnings that beat Wall Street estimates for revenues and profits. Intuitive climbed 10% after reporting higher profits and more procedures performed during its Da Vinci robot, which bodes well for future sales of accessories and suggests the backlog of medical procedures put off during the pandemic remains strong. Shares of Netflix jumped 11.1% to a record closing high after the streaming giant topped Wall Street estimates for subscriber additions and said it expected continued growth through the end of the year. Netflix added 5.1 million subscribers and beat Wall Street's revenue and profit estimates. Netflix increase lifted the communications services sector 0.9%, making it the largest gainer among the 11 S&P 500 sectors, while information technology rose 0.5%. The S&P Banks Index slipped 0.1%, though ending its streak of wins at 5. Financial companies have had a broadly positive earnings season so far. The upbeat earnings of financial companies and broadly positive economic data have helped sustain the three main indexes grind upwards in recent days. However, its gains on Friday were restrained by American Express, which lost 3.1% after the credit card company's quarterly revenue missed estimates. CVS Health dropped 5.2% after it replaced CEO Karen Lynch with company veteran David Joyner and withdrew its 2024 profit forecast. The news also weighed on other health insurers, including Cigna and Elevance Health. The latter, which fell 3.1%, closed at its lowest level in nearly 15 months. Energy was the only S&P sector which dropped. It fell 0.4% as it was bogged down by lower oil prices and a 4.7% decline in SLB after it posted earnings below expectations. This dragged down fellow oilfield services providers Baker Hughes and Halliburton by 1.3% and 2.1% respectively. The energy index was the week's worst performing sector, dropping 2.6% as US crude prices slumped 7% due to concerns over Chinese demand and the ongoing conflict in the Middle East. Benchmark US oil futures shed $1.45 a barrel on Friday to end at $69.22 down 10% from the beginning of last week when prices spiked on fears that Israel might bomb Iran's oil fields. Elsewhere, gold prices made new highs. October futures contracts closed at $2,713.70 a troy ounce. Bond yields fell. The yield on the benchmark 10-year notes ended at 4.074%, down from 4.095% on Thursday. US listed shares of Chinese companies such as Alibaba increased following market rallies in Hong Kong and mainland China. China's central bank said it could soon cut interest rates again and kicked off a relenting program and a swap facility. US housing starts and building permits fell last month, new data showed. Fewer new apartments projects outweighed gains in single family home construction. Investors are also digesting new data on the housing market, with housing starts in September hitting 1.35 million, down slightly from August's 1.36 million number. Additionally, building permits dropped to 1.45 million in September from 1.48 million in August. Looking ahead to this week, investors will be eyeing the release of September's US leading economic indicators index, data on existing home sales, and consumer sentiments. That's it for today, folks. See you tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for the market today. Happy investing, stay inspired, and remember, it is all about money.